welcome to this series of pre-scene analysis videos on CIMA's November 2019 Strategic Case Study. The pre-scene that we'll be going through over the next 10 or so videos is lengthy. It's about 35 pages long, which is much longer than the typical CIMA pre-scene, but don't worry, what we're going to do is to draw out the most important elements of the pre-scene, which should make your life as a student that bit easier. So the document deals with a fictional business by the name of Runn, and we'll be working through each and every page of the document, pulling out the most important elements, as I said, linking them to some of the key theories from your E3, F3 and P3 studies, and talking about likely exam issues along the way. So without further ado, let's get into the meat of the pre-scene document, starting with this first page. This introductory section introduces us to Runn Couriers, and you are told that you're a senior manager in the finance function at Runn, which is a major international courier company. You report directly to the board and you advise on special projects and strategic matters. So you're clearly rising in the world. For those of you who have done the operational and management case studies, you would have started out as a lowly finance officer, then graduated to a finance manager, and now you are interacting with the top people at the enterprise as a senior manager. A word first on the Courier Express and Parcel Industry, CEP, which we'll refer to it as for short for the rest of the pre-scene analysis. It's doing very good growth. It's expected to reach more than $400 billion by 2024. It's growing at an annual rate of 8 to 10%, or that is the expectation between 2019 and 2024. And the hope at this very early stage is that your company, Runn, is tapping into some of that growth, and that will be revealed when we look at the financial statements later on. As an international company, one that is exposed to global markets, with the push towards globalization in the last 30 or 40 years, we have seen an increasing interdependence of countries. Their fortunes tend to be linked as trade flows increase between nations, capital flows go back and forward between different nations across the globe at increasingly fast rates. Technologies spread ever more quickly in a globalized world. So all of that will come to bear on an internationally diversified company like Runn. What I would say though is that there's been a little bit of a pushback against globalization in recent years with, the election of Donald Trump in the United States. Currently, there is a trade war between the United States and China. Even something like Brexit, where Britain has deemed its own interests to be not running in line with the interests of Europe. And there's a little bit of a pullback there, so things have become less globalized than they were before, perhaps. It remains to be seen whether this is just a temporary blip and whether we will return to a more globalized world, or whether this is a more serious pushback against globalization. So Runn is based in the fictional country of G-Land, where the currency is the G dollar. And G-Land, we're told, requires companies to prepare their financial statements in accordance with international financial reporting standards. So the fact that Runn is operating with this G dollar means, especially as a multinational company, that they're undoubtedly going to be exposed to the risk of adverse exchange rate movements. So they'll be swapping their currency for other currencies, and the danger is that there can be volatile movements over the course of a number of months or a year. Will they be hedging against that risk? We will see when we look at their financial statements. Runn is a quoted business. It's quoted on the stock exchange of G-Land. It's an active and well-regulated exchange. Companies quoted on the exchange are expected to adhere to the Code of Corporate Governance. And that governance code lays out detailed regulations that companies are expected to adhere to. So as a quoted company, there are pros and cons that come with that. Obviously, the benefits would relate to Runn being able to tap into more financing options. They can draw on equity funding as well as debt funding. Companies that are quoted publicly on stock exchange tend to be more reputable. They are deemed to have their house in order. On the other side, though, of the equation, there are compliance obligations as they have to publish their audited financial statements every year and every quarter. There is shareholder pressure. They expect returns in the way of share price appreciation and or dividend payments. And in general, there's a lot of scrutiny from investment analysts and the public at large. So we're told that G-Land has a well-developed economy. It's based on a mix of manufacturing and service industries. Employment rates are very high. Wages are high as well. There is a minimum hourly wage that is written into law. However, a good deal of the population actually earns well in advance of that minimum wage. So what's likely is that there are higher employee costs in the form of salaries for Runn to contend with. And that category, wages and salaries, rose by 6% in the last year. So it's something the company needs to keep a close eye on. Having said that, the demand conditions look very good in this country. Factor conditions look good too. Thinking back to Porter's Diamond, this is a country with a population that is likely to have a good deal of disposable income due to those higher wages. Probably it has good infrastructure, which is very important for a courier company. So road infrastructure is going to make their life that bit easier. And the population is likely to have good access to education and healthcare, meaning that probably this is an educated population with long life expectancy. So all of that is good for a company like Runn. Demand conditions are probably quite favorable. So as a senior manager, your focus will be long-term in nature. You're no longer dealing with day-to-day issues. Instead, you would be expected to make recommendations on issues that play out over the long term, so strategic issues. You're going to be dealing with senior leaders at the business, so you'll have to bring your leadership and people skills to bear so as to influence them. And you'll be expected to demonstrate an understanding of the wider context within which your business operates. So at the operational case study level, you would have had your head down, focused on the day-to-day business of your company alone. Now it's all about having that awareness of the wider industry within which your company is placed, key stakeholders such as shareholders, the locale in which your business is based, thinking about externalities that might affect the people living in close proximity to your business, etc., etc. Some of the most important theoretical areas from your objective test studies at the strategic level relating to the strategic case study would be, from E3, recommending strategic options, P3, considering the risks that come with those strategic recommendations, and F3, putting adequate long-term financing in place as you think about long-term strategies such as acquisitions, entry into new markets, etc., etc. So let's take a look at the wider context within which your business is actually placed, the CEP industry or Courier Express and Parcel industry. We're told that couriers provide delivery services to their clients. Generally, they offer either or both of the below elements, security and speed, and tailored services. So this is the service sector, which obviously in developing economies constitutes an increasingly important part of the total GDP. So again, a sign that this is a quite developed market. Just a word again on the industry and the trends driving the growth in the CEP industry in the last decade. If you think about a useful model you would have come across in your enterprise studies, even at E1 and E2 level, the pest analysis, increasing production of high-value goods, lightweight goods, and expanded trade between nations has certainly contributed to the growth in the CEP industry in the last decade. So there we would have political implications for increased trade between nations. That's part of the trend towards globalization that I've talked about in recent decades. There are economic factors there with the expansion in trade as well, and the increase in the production and purchase of high-value lightweight goods. You think about iPhones and things like that. Very, very high value, but quite lightweight. And the rise in e-commerce in the last decade with giants like Amazon, that's a technological advance, has driven demand for services, delivery services, the rise of the internet and smartphone penetration all across the world, not just in developed countries, but in developing economies too. And the rise of the middle class, especially in developing economies with greater disposable income, that has also driven demand for e-commerce products, those high-value lightweight goods, and the delivery services that go hand in hand with those goods. So going down to the grid below, the two elements that make up delivery services, one factor is security and speed. That's kind of for more generic services. It's like a minimum expectation that the public would have of delivery services, courier companies like Runn. So items are tracked electronically, we're told, from collection until delivery. There are systems put in place to deter theft at premises where packages are left off, and indeed in the vehicles that deliver those packages. So what we're seeing early on is that there is a need for IT systems to be put in place, which is a cost for Runn to bear. Most couriers offer a guaranteed delivery deadline related to the speed of delivery. For a more rapid service, same-day delivery, for example, or next-day delivery, they can actually charge a higher fee. For more tailored services, for more customized services, there is a higher price. Couriers, we're told, will usually collect packages from clients and deliver them to them. Some couriers offer locations at which packages can actually be dropped off, and that can actually reduce the cost of the total service. So it makes the courier company's job that bit less complex. Large courier companies such as Runn have bespoke logistical services for businesses. So businesses can actually outsource some of these functions and look for a logistics partner such as Runn, where Runn is actually managing its inventory management system. So this is a business-to-business type service for Runn to get into. And in this way, the service could include deciding on the scheduling of deliveries, for example, with the courier being responsible for optimizing loads and routes. And with this, smaller businesses or even medium-sized businesses might want to outsource a non-core activity such as distribution, the collection of their goods and delivery to, supermarket customers or something if they were making foods, and Runn could step in and satisfy that particular demand. Courier companies, we're told, can take a variety of different forms, ranging from local couriers operating within a particular city to big multinational corporations, and Runn certainly falls under that categorization. Larger couriers might also have tie-ups with some local couriers for last-mile connectivity. We'll actually see in a while that it's that last mile of delivery that adds a lot of the complexity and cost for courier companies as they go looking for particular addresses, and it can become quite tricky. People are out, they're not at home, so they can't make their delivery, they have to go back later, and that adds cost for the companies. So it might be the case that certain companies decide, we don't want to deal with that hassle, let's just outsource it to a more locally knowledgeable small company that knows exactly where certain addresses are. So local couriers often offer point-to-point collection and delivery services, we're told. There are services that are required by professionals like lawyers and architects that require the delivery of time-sensitive documents or plans within a city. Such couriers that deliver these documents might use bicycles and motorbikes to get around more quickly if there are big delays with traffic, because these are time-sensitive documents. One question we might raise here is whether this service will fall away in the future with the increasing digitization of documents. So that would mean that the delivery of these physical documents would become obsolete. Larger couriers operate across nations or even across international boundaries. They offer often point-to-point services, so they would carry out that last mile delivery as well, operating over great distances that wouldn't be covered by the local couriers. So an example is given here of a large multinational courier that might be required to deliver a spare part urgently to an airline company. That would obviously be very time sensitive and urgent, and would involve probably tremendous cost as they rush that part to an airline company, and could charge a lot for that delivery service. So it would involve planes, maybe ships, and delivery vans as well. So in that way, you would need a multinational company probably to carry out the whole point-to-point service. They could charge quite a handsome fee for that. We would also make reference at a later stage to page 30 of this document, where it talks about 3D technology and the ability to actually print parts, and it's becoming more and more advanced. So, the delivery of that plane part in the future, that plane part might actually be printed in 3D fashion. And again, it would make that service obsolete. And there are a couple of courier companies, big multinational companies, actually investing in 3D printing technology with that end in mind. On the next page, we're presented with the hub and spoke model with which Runn operates. The idea with the hub and spoke model is that it minimizes wasted capacity for the vehicles. So you have 3 hubs in this particular diagram with, I think, 7 other depots, and the depots are each connected to one of these main hubs. So what's happening is the courier divides up the country into regions, each centered on a major city or town. Each region then has a hub or depot that coordinates all collections and deliveries within that region. Each depot is connected to a hub, or even more than one hub. It could be connected to 2. When goods are collected, they're taken from their nearest depot for sorting, and transfers between depots are made via hubs. So, for example, items collected by the City F depot will either be retained if they're to be delivered locally, that is in City F, or transported in bulk to the City A hub for sorting, and then they would be sent on their way to the correct city from the City A hub. So this arrangement means that the trucks used to transport items in bulk have little wasted capacity. They're full going out. And on arrival at the final delivery depots, packages are transferred to the vehicles that will make the final delivery. That's that last mile. And the last mile delivery is the crucial piece of logistics. And that final mile actually adds a lot of cost. In fact, it adds up to half of the supply chain costs. So that seems to me to be a crucial area of focus for a company like Runn. If they're looking to strip out some cost, it's the last mile they need to focus on. Lessening complexity there would greatly reduce their costs. So this hub and spoke system must be managed carefully, we're told, to ensure that deadlines are met. Customers get the option to choose between different time frames. They could opt for next day delivery, which will come at a cost, or they could be less time sensitive and they say, deliver it within 7 days, in which case the delivery costs go down. So the faster the delivery, the more cost, the higher the price that Runn can charge. So let's go back to that hub and spoke model. What's interesting is that in the industry, there are many small and regional players to make cost savings, actually use a third-party logistics company for that last mile delivery, rather than having an end-to-end service. So in that way, they're able to reduce the complexity of their operations and reduce costs. So for those smaller players, they're just opting not to go the last mile. However, for a big company like Runn, they want to be seen to offer a full service, point to point. They don't really have that option, so they need to incur those last mile costs. So it's all about getting the last mile costs down in any way they can. Tier 2 and Tier 3 suppliers entering the CEP market, so these are less well known, smaller companies, often actually opt to handle, in some cases, the last mile delivery. So they'll focus on that. So while some small companies actually ignore it altogether and outsource it to a bigger company, some small companies actually decide, that's the part of the supply chain we're actually going to focus on. And they go seek out e-commerce partners who don't want to handle that themselves. They want to outsource the distribution part of their business and non-core activity to a specialist delivery company. And you have these smaller companies come in and say, we'll take care of that hassle for you and you can pay us well for that hassle. On page 5 of the pre-scene, we're presented with a nice overview of the CEP industry. And we see where couriers like Runn fit in compared to the traditional postal service and bigger freight haulage services. So you can see that the big differentiator really for the CEP companies is speed. They can deliver on the same day or the next day. They can define a particular day in which their delivery will arrive. That's not really the case with traditional postal services, where the time frame for deliveries is uncertain. That seems to be more the case as well with big freight haulage services that move big packages, 800 kilos and above. Although we see some very big players in the CEP industry are also present in haulage, and there are indications later in the pre-scene that Runn itself is also operating in that particular segment of the market. So for traditional CEP companies that tend to transport documents and smaller parcels, traditional freight haulage services represents a diversification opportunity for those companies. So with the postal service, it's a challenger for a company like Runn, but they deal in altogether less time-sensitive documents and smaller packages. Whereas we said before, freight haulage is all about moving big amounts of cargo. Although there is some overlap, as it says here, in between the different services. As I said, there are indications that Runn is actually operating with bigger packages that traditionally fall under the category of freight haulage. There might be an opportunity as well for a company like Runn to partner with postal services in different countries. That's happening in the United States. I'll talk about that in a little while. So there might be an opportunity there for them to do business with the postal service in certain countries. Courier companies, we're told in the next paragraph, take different forms. As a broad generalization, though, they specialize in moving smaller packages and documents, and they tend not to operate in the traditional freight haulage area. Although couriers generally offer a more flexible service than postal service companies and freight haulage businesses as well. Although, as it says above, there is overlap between the different areas. In real life, DHL, FedEx, UPS, they're three of the giants of the CEP industry, also have planes that carry heavy cargo. So they are present in freight haulage, as is Runn. And the big differentiating factor, as we said before, for courier companies like Runn is speed. Okay, so they're able to offer a faster service than the post office. And with speedier service, that adds cost, and that cost is passed on to the customer. Customers who order through couriers are often less price sensitive. They're willing to pay a little bit more than they would for the postal service in order to get their package or document more quickly. And the challenge is not just getting the packages to the end consumer quickly, but also securely, ensuring that there's no damage to the package, that they arrive at the right location, etc. We'll talk about balancing the need to get things to consumers quickly with some other goals in the next paragraph. So lower fees are available to consumers who are willing to hold off on delivery, take later delivery, or for the delivery date to be undefined. Some courier companies offer delivery on specific dates or indeed at a specific time during the day, and they can guarantee delivery on a Saturday or in the evening when the customer is at home. That reduces uncertainty and is likely to reduce the time needed per order. One of the big challenges for companies like Runn is turning up with a package and finding out that the customer is not actually home. Then they have to go away and go back again. That adds time, that adds cost. So anything that would reduce that uncertainty and reduce that time per order would save the company costs. Some couriers accept items for delivery, we're told, within a specific time period, such as within 3 to 5 working days. But with that kind of slower service, they're going head-to-head with traditional postal services. And the thing with traditional postal services is that they can actually do that kind of delivery for a lower cost. In many cases, the postal service is nationalised, it would be subsidised. That helps them then to pass on savings to the consumer. So the challenge really for courier companies, I think, is balancing the need to get packages and documents to the consumer quickly, but also ensuring that their service is reliable so that they arrive at the right destination, that they're in one piece, and that the quality of the service is good. There is, remember, when it comes to services, often there are those three considerations: time, quality, and cost. And it's very hard to balance all three. Often you might find that a business is opting for two of the three and sacrificing another one. So if you're speedy and it's high quality and reliable, then it's likely to be quite costly for the consumer. If you want to go for something that's speedy and keeps the cost down, then it's likely quality and reliability would actually be compromised. So the big two really for Runn are speed and quality. So if they can do that, they can justify a higher price being charged to the customer. Typically, a company like Runn is offering a door-to-door service. We've talked about, though, the last mile being the most costly due to the fact that customers are away, they're not home, etc. That increases the complexity of the job Runn has to do. Traditional postal services, we're told, are able to undercut couriers on price for those non-urgent deliveries. Often you find that postal services are nationalised, they receive subsidies, so they have cost advantages over traditional courier companies. In some countries, we're told, postal services also offer secure and speedy services. So the perception is because the postal service is nationalised, it's not going to be very efficient. It's not always the case, though. In many countries, the postal system is actually not just cheap, but really very efficient. And obviously, a company like Runn would be up against it in those countries. So where postal services are secure and speedy, they can actually compete head-to-head with companies like Runn for same-day deliveries and next-day deliveries. In the United States, the USPS, the United States Postal Service, actually has a monopoly over the delivery of non-urgent residential letters. So that obviously would be a big challenge to real-life companies like FedEx, etc., operating in the United States. It's likely they're not paying much attention to non-urgent residential letters because they wouldn't be able to compete at the same price level as the USPS. I talked already about, tie-ups, the potential for tie-ups between private CEP companies and public postal services. We've seen that global suppliers are often trying to enhance their presence in certain markets by having tie-ups with regional players or indeed postal services in certain countries. UPS, for example, which is a big courier company, cooperates with First Flight Couriers in India to increase its presence in the Indian CEP market. It's likely that First Flight would have intimate knowledge of the Indian terrain. UPS would not, so it's probably utilising First Flight for especially that last mile, which is the trickiest often. In the US, through the USPS's express mail and package delivery services, there is direct competition for FedEx and UPS, but both the companies have agreements with the United States Postal Service to deliver packages which are larger and heavier than what the United States Postal Service would typically deliver. So that's another example of tie-ups between private companies and publicly run postal services. Some couriers, we're told, do handle larger consignments. Their upper limit, we're told, is generally limited to the size of a typical courier van. We have a picture of a typical courier van to the right. But larger consignments that require collection and delivery in a heavy goods vehicle are generally left to traditional road haulage companies. Now, there's no mention of road haulage being part of Runn's business, so that maybe represents an opportunity for Runn to diversify a little bit. Couriers, we're told, generally serve the B2B segment of the market, but B2C is growing significantly in the last decade or so, largely thanks to the growth in online retailing. So people are buying more from online retailers like Amazon. The e-commerce industry is really a huge driving force in the growth of domestic and international courier services. Since 2017, or at the end of 2017 rather, revenue in the e-commerce sector stood at $2.3 trillion, so absolutely massive, and it's growing at a rate of 18% per year, and that's expected to continue through to the end of 2020. So a massive B2C growth segment. The B2B sector, though, is still more profitable, but it is the B2C sector that is growing more rapidly. And then you have a niche area that is also growing. It's C2C services. This is the sale of goods from private individuals to other private individuals. They will be using online auction sites like eBay, for example, to sell unwanted goods, and companies like Runn have an opportunity there to transport those goods from one consumer to another consumer. So it's fair to say that the business environment is changing rapidly, and as a result of changing customer needs, couriers are having to adapt their offering. Generally, you would say that customers availing of courier services have high buyer power due to the fact that they have so many options. Not just lots of private courier companies like Runn, but they have the postal service, they have large freight haulage services as well. B2C deliveries, we're told, are changing at the fastest rate, particularly with regard to that last mile. That's where all the complexity is, that's where the cost is being added, so you can be sure that private companies like Runn are looking at that last mile, looking to make time and cost savings there. So, online sales driving the growth in courier services. As a result, the courier services are having to adapt rapidly to changing needs. Pricing models, for example, have had to allow for the fact that B2C deliveries are generally more time consuming and expensive than B2B. So it's true that that last mile is going to add cost for the end consumer, but that ability to charge higher prices, as we will see in a few pages' time, has been on the decline for a number of years. On-time delivery plays a crucial role in e-commerce, obviously. People are increasingly demanding same-day and next-day delivery of their goods. Companies like Amazon are aggressively trying to get items to consumers who order on Amazon.com much more quickly. They're offering same-day services or delivery in many, many cases. E-retailers, though, generally are relying on CEP service providers to do the job for them. So CEP providers are acting as an intermediary. They're getting the products from online retailers to the end consumer, and the pressure to get them there more quickly is growing all the time. Traditional retailers then, who operate from physical retail stores, are also using CEP service providers. These retailers generally use their shops to fulfill online orders, so they've got a dual presence. They're selling through a website perhaps, but they have their physical store presence, and the CEP service providers are coming along to pick up goods to deliver to the end consumer. Some retailers do offer express deliveries, with customers being promised delivery within a matter of hours of their order. That obviously requires speed from the couriers and flexibility from the couriers, and that's a big challenge for them to meet. The problems created by B2C deliveries has led to the development of a number of digital strategies. So technology, as we will see, is a key part of what Runn is doing to meet the increasingly demanding needs of consumers. For example, many courier companies, we're told, fit their vans with computers that use GPS, mobile Wi-Fi to enable the location of a delivery van to be tracked at all times. Furthermore, drivers are using hand scanners to log the delivery of items. All of this, of course, requires fast, reliable internet connections that can vary from country to country. That's a factor condition. Thinking of porters, factor conditions there. And connectivity allows for the fast transfer and exchange of data without human intervention. So it's a way to speed up and automate a lot of what Runn is doing. On the next page, we're told that couriers can text or email recipients to say that the items that are due for delivery have been loaded and will be delivered that day. Some systems then update the recipient by sending an expected time slot for delivery. And recipients can usually go online to reschedule delivery if they're unavailable. So anything really that can reduce the number of unsuccessful deliveries where the recipient is out of the house is a good thing. It would reduce the number of failed deliveries and reduce the time required to make a successful delivery. We can link all of this to page 34 of the pre-scene. B2C deliveries cost more due to failed delivery attempts. As I said, Runn could monitor the failed deliveries as a KPI and try to get it down, try to reduce it. So certainly that could form part, of a balanced scorecard approach to performance indicators. Some couriers offer alternatives to home deliveries. Online customers can often opt to have their goods deposited to a designated secure place when they make their order, and they can go along then to pick the item up from that secured place. Small local shops often act as drop-off points for courier companies. The courier drops off a delivery there and the recipient is informed by text or email. They can go along then to pick things up. Runn, though, does not seem to offer alternatives to traditional home deliveries. So certainly I think it could consider strategic alliances with certain stores. Indeed, it might want to invest in a network of automated lockers, which is mentioned in the next paragraph, where we're told that some couriers have a network of automated lockers that are located throughout a city, for example, or in certain stores. 24-hour supermarkets would be very convenient there. And the recipient of an order would receive a text message or email with a one-time code they could use to unlock the lockers at a certain store, so they would go along and pick their delivery up there. And what this does is it reduces the need, it removes the need for Runn to actually go that last mile where the complexity, cost and time is added. So they just drop things off at one of these lockers or at a particular store, and then it's up to the recipient to make their way there. Couriers are also adapting to the C2C market, which is growing but still quite a small part of the overall revenues for Runn. They establish collection points in high street shops, so convenient locations where private individuals can drop off goods and buyers can pick them up. So this would help to facilitate the sale of second-hand goods on sites like eBay, for example. So this is a growing area. It may well be that Runn wants to consider an acquisition of a niche company that is making headway in the C2C market. The C2C market still represents a very small part of what Runn is doing, it seems. So it might be that they are looking out for a company with expertise in that area. Online retailers, we're told, often use couriers for reverse logistics. That is the return of goods that customers who've ordered online, for example, don't want. They want to send them back. There's no mention of a reverse logistics service for Runn. So again, it's another area that the company might want to look at offering. B2B services, though, still the most profitable part of what the company is doing. It's larger for some services. The overall growth rate, though, is higher in B2C. And some courier companies, we're told, are actually able to charge more for B2C deliveries because they generally take longer and cost more to facilitate than B2B deliveries, which are more straightforward. So thinking back to P1 and P2, you might want to consider costing, budgeting, and variance analysis for the different market segments that the company has, where we know that, for example, profitability is likely to be higher in B2B due to the fact that it's simpler to serve that market. And we'll talk about the reasons why in a few pages' time. The company as well might want to segment its market and customer types and look at something like customer profitability analysis and see how they can improve profitability for certain customer segments. On page 8, we're presented with an overview of the global courier market by category. Those three categories being B2B, B2C deliveries, and C2C. So C2C is the emerging segment, represents 6% of global revenue and 6% of global profit. The bigger areas are B2B and B2C. So we'll see that B2C now represents a higher chunk of global revenues than B2B. 49% of total revenues falling under B2C, 45% of total revenues falling under B2B. But what we see is that B2B is still offering higher profitability. It's lower for B2C due to the complexity of that last mile, especially in getting packages to private individuals. The B2B segment, higher profit margins. It's likely to be in the late growth or mature stage when you think of the product life or industry life cycle. B2C, on the other hand, has a higher share of the market now in terms of the revenues. It seems to be a growth segment, but margins for the moment are lower. So you can be sure that big companies like Runn are looking at the B2C market to see how they can improve profitability, especially, as I said before, trying to get the cost of serving that last mile down. And in the last part of page 8, we're told the availability of flexible and reliable courier services has created growth in international trade. So companies like Runn are enabling the transfer of goods from retailers, both online and offline, to the end consumer. They're an intermediary and they are enabling the transfer of goods across international borders, but also within countries. So domestic shipping accounts for more than 75% of the total global courier business, but international trade is growing at a faster rate. So apart from cross-border e-commerce transactions, which has been growing very, very quickly, as we said before, there has been a growth in the number of free trade agreements between nations and regions in the last few decades. There are special economic zones popping up where taxes are lower. They try to generate more trade in these areas and offer special terms to companies operating in these special economic zones. China and the US are the two most popular destinations for cross-border e-commerce purchases across the world. That is no surprise. One area of concern would be the recent trade war between China and the United States, with a bit of a tit for tat. One accuses the other of some misdemeanor. The other responds by slapping tariffs on goods made in China or the US, and that is going to lead to a slowdown in international trade, which would hurt the company like Runn that is serving the retailers in these countries and the consumers in these countries by acting as an intermediary to pass goods between the two countries.